guys. Here we are again with Thrive Live. We have Jason Walker today, and Jason has a guest for us. It's going to talk about something a little bit different than we've talked about in our previous broadcast. So let's kind of see what he's got for us, and let him tell us about our guest. Hey, Jason.
Hey, good morning, Beth from Austin, Texas. How are you today?
I'm great. The weather's cooler in Katy. I feel like we're on a weather channel. We always talk weather, right?
Yes, that's one of the main topics in Texas is the weather. If you're not talking about the weather, you're not from Texas. That is for sure. So we have a great guest today. We have my friend Trey Davis, and Trey's going to talk about benefits, which is usually something that you don't get really excited about. But I asked Trey to come on because he's really one of the best people that I've ever met that talks about benefits in terms of his passion and his knowledge around benefits. He is really, really great on this topic. And Trey is our friend who works for Highpoint Insurance. He's a risk architect for their benefits organization, and they're a great, great organization. He's a great benefits resource, and we're going to bring him in to talk about benefits as it relates to COVID and ACA and a lot of other things that are going on right now. And he's also a huge Alabama Crimson Tide fan. So welcome, Trey Davis, to Thrive Live.
Hi, Trey.
Thank you, Jason. I appreciate it. You can see my jersey in the back, right?
Yes, and I didn't lie. He is a huge Alabama fan, so that is very true.
No, thanks for having me. I appreciate it.
No, and I'm really serious about that. You know, I've been in human resources for a while now. I don't want to date myself, but in benefits is usually one of those topics that's somewhat dry and gets a little bit stale 15 minutes after you start to talk about it. But Trey does a great job of bringing it to life and making it really interesting. So, Trey, one of the first things I'd like to ask you are, what are your thoughts around the future of ACA and the impact to employers?
That's a good question, Jason. I think it all depends really on what happens in November, right? When the Trump administration came in, they made a lot of or tried to make a lot of changes to the ACA. That large of legislation has never been overturned in the history of our country, and so they had to go about it a different way of reducing the penalties for the individual mandate portion of it. So it really depends. If the Democrats win in November, then ACA I think will continue on, and some type of government-run programs will continue to move forward. If the Trump administration keeps going, then I think they'll keep moving in a direction of getting away from that and moving forward. So I guess it all depends on November 3rd.
So we're really in a wait-and-see strategy on what's going to happen with the ACA.
Yeah, I think it's the way that it's been funded, that everybody has to have health insurance. Well, now there's no penalty to that, and so it's really the funding mechanism of how it was set up has been taken away, and most of the ACA Obamacare plans are HMO plans. They're very limited networks, and they're still high in premium cost, and so we've seen a exodus of people leaving those plans and going back to traditional group plans.
One of the things that gets talked about a lot is fully insured plans versus self-funded plans. Can you talk a little bit about maybe what that means, fully insured versus self-funded, and then what's happening in the marketplace?
Yep, absolutely. We don't use the word self-funded. We use performance-based solutions. And sometimes when you say self-funded, people get, if there's a risk tolerance in it, and people kind of get freaked out when you talk about self-funded. But if you talk about performance-based solutions, this year is an ideal situation with COVID, that all the elective procedures, all the stuff that usually goes on in hospitals, all that's there's no claims. So the only claims out there are COVID claims. And so if you're fully insured, you're paying the insurance company all this money every month, no matter if anybody goes to the doctor or not. the insurance company is winning right now. They're winning hand over fist off of your benefits. They're paying no claims, and you're still paying the same amount of premium. Well, under a performance-based plan, you as the employer or the plan sponsor are winning. You're not paying those claims out under those self-funded performance-based programs. And there's different kinds of performance-based programs that we can get into: level funded, captives, reference-based pricing. There's all different kind of things, but it's more and more companies are going to that solution or heading into that solution just for cost containment and to reduce the cost of healthcare for them as the employer. Because, the cost of healthcare, providing health benefits, is probably a top 3 line item expense for most companies. And so in order to reduce that cost, we got to look outside the box and do things differently. And now a lot of those performance-based solutions that were only, out there for your Fortune 500 or your larger companies, now we've got carriers that'll write it down to 20 lives. And so depending on the situation, there's some good opportunities out there on the performance-based solution side. But it's all about risk tolerance and what you're comfortable with. But I see more and more companies going to that route, especially this year with COVID. If you were a performance-based plan, most claims are, right now running loss ratio in that 30 to 40% range. And so those companies are winning big in those situations versus the insurance company.
One of the things that I like about working with you and Highpoint when we've worked in the past is that you guys do a great job of really thinking about a lot of alternative solutions. And I really appreciate that. You're not a static group that says, hey, you've done it this way, let's do it this way forever. And I really think that that's the way that you need to look at benefits. And one of the things that you've said to me repeatedly, which really stands out, is you've said many times that benefits are really almost unaffordable at this point, which leads into my question. How can employers do some things to reduce the cost of healthcare and make it a little bit more affordable for them to reduce some of that line item?
Well, a great question, and I appreciate the comments. I think the first thing that employers need to do is kind of have the mindset to think outside the box. We can't do what we did, a year ago, 3 years ago, 5 years ago, 10 years ago. We've got to do things differently. Performance-based solutions would be one of those. Look at those different type of programs. It comes to a funding strategy, and your employees don't see any difference in your deductibles, co-pays, but how the plan is funded. Being fully insured versus level funded or self-funded or whatever the case may be. There's programs like that. A lot of high deductible health plans are coming into play where you can get into help participate in a health savings account. And that brings in a lot more consumerism and employees getting more involved in their health care, because if they're just going out there paying a copay, they really don't care what the cost of that procedure is. And so getting them educated on some of that stuff is good, and understanding how it works and what the true cost of those procedures are. And then a lot of companies are doing different things with pharmacy benefits. Specialty RX is a big component right now in the overall cost of healthcare. And so we have some pharmacy benefit managers. You can even carve out your pharmacy benefit from your medical benefit and do some different things to control some of those costs on the pharmacy side, especially now with COVID and stress and depression and everything going on. It's those claims on the prescription specialty RX side are increasing. And so employers are, doing ways to control, chronic illness through different avenues and so forth. So it's really having an open mindset and thinking outside the box, not your typically, we're going to pay the insurance carrier this money every month and then let them do it. Take some ownership in it. And I think you'll see that you can control and and win when it comes to your healthcare dollars.
Could you talk to us a little bit about what you're seeing as it relates to, and you just mentioned medication and pharmacy for COVID-19, as we look at potentially a vaccine coming on board, those people that have had to take medication as it relates to perhaps contracting COVID-19, and what have you seen in that arena?
It's all over the board. I think, I'll give kind of some credit to the CDC and the Trump administration on coming out with a vaccine this quick. I think a lot of the medications that are being used, some of them are, very, very expensive, and, through some manufacturer coupons and discounts and depending on the way the plan is set up, that could be a huge expense for not only the employee, but the employer. So, there's other options out there. There's different medicines that do different things. Generic, we're a big proponent in pushing generic medication over brand name, just because the cost is so different. But sometimes there's not a generic alternative or a solution there. But I think once they come out with some type of vaccine for COVID-19, they say by the end of the year, hopefully earlier, I think a lot of this stuff goes away, and hopefully it'll be affordable enough where everybody can get that if need be, kind of like the flu shot is today, something similar to that.
So we've obviously been dealing with COVID-19 since March. And one of the things that we'd like to ask you is, what have you seen as it relates to how employers are dealing with COVID-19, and how are they, re-entering back into the workforce? What are some of the things that you're seeing?
Yeah, it's a great question. We kind of, when March happened and everybody, the pandemic hit, everybody kind of was sent home, and now slowly over time, everybody's been somewhat trickling back into the office. I know here at Highpoint, most of us are back in, but I know some of those companies that have employees all across the country, they're probably staying home until, at least the end of the year. And I think the big thing is, from an employer standpoint, when you bring those people back, you need to have a safe and work environment, right? And you need to make sure you have your procedures, your employee handbook, all your rules, regulations, and everything to create a safe work environment. I'll tell a funny story. I went into a customer the other day, and when you walked in the door, you had to have your mask on, and the receptionist was taking your temperature. And so I asked her, what is the passing temperature? What do my temperature have to be in order for me to get into the building? And she said, well, it really doesn't matter. The thermometer doesn't work anyway.
Oh my gosh.
It's a matter of she's going through the procedure. The camera's on her, so it looks like they're going through the procedure. But, I think it's just have a safety plan set up, have make sure you're cleaning the facility, make sure you're doing everything from an employer's standpoint to have a safe work environment for your people. And if someone develops COVID, make sure you have a plan to, that person needs to go home and quarantine, and those people around them. Just make sure you have a plan around that is the biggest thing.
What are you seeing as it relates to lawsuits with COVID-19? So obviously your story there is somewhat interesting. Somebody enters the building and has COVID-19 and potentially infects another coworker. What are you seeing as it relates to that?
Yeah, that's a great question. There's actually, I was reading a study a while back. There's actually been a 400% increase in lawsuits due only to COVID, where employees are suing their employer for discrimination. Most of the lawsuits have to do with discrimination, sexual harassment, stuff like that. Not getting promoted because of whatever, that's kind of traditionally what it is. and the most of the ones today are COVID related. Somebody was laid off or furloughed or developed COVID, and they sent them home, and they're having to not get paid for a certain period of time. So there's been a huge increase in those type of lawsuits. And what we tell our customers is, there are policies and protection that you can put in place to help reduce the exposure there. There's EPLI insurance, employee practice liability, fiduciary's liability. A big thing now is cybersecurity. Everybody's working at home. And cyber is a huge deal, and a lot of companies are getting taken advantage of because of that. And so have a cybersecurity policy in your insurance package to help protect against that. And so I think there's ways that there's policies. EPLI, employee practice, is one of the ones that's getting utilized a lot, and it's harder and harder to get that coverage, and the price of that coverage is going up just due to the mass flux of everybody, all the different lawsuits coming about. But I think there's ways to control that risk where you can maintain your normal day-to-day business and not get taken advantage of.
As we've gone through COVID-19, what's been one of the most surprising things about the pandemic as it's impacted the insurance industry that you've seen? Anything that you can share with us?
I think that that's an interesting question. I think that the biggest thing impact is I think we've yet to see it, to be honest with you, Jason. I think the and just looking at renewals and what the future in holds with COVID-19, the insurance carriers are being very conservative with what their projections, their actuarial, the underwriters actuarial, what they're projecting for next year, right? And so most people look that there's going to be an uptick, another COVID uptick. Maybe not to the extreme that it has been, but there's going to be another uptick. So they're looking at that. They're these hospitals that all these elective surgeries and all these procedures that were typically these hospitals used to be full. These hospitals, I read a statistic the other day, losing $60 billion during COVID just because nobody's in the hospital and nobody's getting these procedures done. And so I think the hospitals, most of them have a contract with the insurance carrier. They're going to start, when they negotiate those contracts, they're going to start just want to, recoup some of that money, right? And so I think with that, we don't know what the future is going to hold. Some of those people that put off getting those elective surgeries, they may come back in mass. And so, the second half of this year, first of next year, we may see a huge change in, how many of those procedures are getting done. So I think it's kind of the future is really going to be impacted. I think, we've seen rate increases anywhere from rate passes to 20%, on plans that are running at 30% loss ratio.
Wow.
Which is crazy. And so I think the good news is they're willing to have that conversation. And that's one thing we do is we have that conversation with the underwriter. And if you're running at 30%, there's no high claims out there. We're able to get those renewals down to, rate pass single digits, or at least in favor of the employer. But I think it's just they don't know what the future is going to hold. If things continue, then I think we'll see, a increase in, most employers have become accustomed to, double-digit rate increases over the last couple of years. I think we may see some of that just due to COVID and the and how they actuarial, figure out how they're going to recoup that money.
Yeah, it's fairly challenging environment. I read this week alone that 3 hospitals are just going out of business, belly up, in the area because of nobody going in for elective surgeries and other things because of the scares with COVID. Can you talk a little bit about wellness? I know that that's still an important topic where we need to stay well and we need to keep healthy. Can you talk a little bit about what's going on with wellness,
Yeah.
and maybe the new things that you're seeing?
Yep, absolutely. Wellness is a key player, especially if you're going to go to a performance-based solution, strategy or plan. Wellness is a key component of that. And, wellness, we traditionally think of wellness as like biometric screenings, health assessment, flu shots, that type of thing. Wellness has kind of transitioned into more of a well-being type of thing. Not only your physical body, but you have to look at your financial wellness, your social wellness. And one of the things we do here at Highpoint is we have in August is our anniversary. So we just had, I think, our 11th year anniversary, and we do, it's also Employee Wellness Month. And so what we do is we have a bingo card. You'll see it. I got it right here, actually. You'll see the bingo card. And there are items on there that we have to complete during the month of August, all related to wellness.
Oh, that's great.
And it's either, it's there's a book called Fuel Your Fire, and there's 5 energy drivers, right? One is move, get out and exercise, walk, do whatever, but just move. There's one that's eat, make sure you're eating, your meal, 3 meals a day and eating right. Sleep, you need sleep. You got to have sleep and rest. Relaxation, you have to go to the beach, you have to go relax with the family. But the other one, the last one, is connect. And I think one of the things with COVID that's caused a lot of stress and depression and everything else is we're not connecting with other people, right? We're working from home, right? We're connecting with our family if they're at home, but we're not, connecting on a day-to-day basis with our coworkers in the office, our customers, whatever the case may be. Most everything's virtual. We just started going back and face to face with our clients. And so people are losing that connectability. And I think that's a big component of it. And so, but yeah, this bingo thing was cool. We did everything from write a goal down and complete it to, drink half your body weight in water, get out and exercise, ride a bike, do all different kinds of things. And it kind of gets you motivated, and get you doing things. But I think wellness is a huge component of the overall, especially if you're going to do a performance-based solution, you have to have wellness as a component of that.
Yeah, you guys are a great provider to be able to help come up with those ideas and create a wellness solution. So I've appreciated what you've done for us in the past around that topic. My wife says I'm connecting with her too much, so I don't know what that means, but we'll have to figure that out.
Absolutely.
One of the things that was a really big topic before COVID came up was student loans. And there was a lot of discussion around, do we forgive student loans? How do people pay student loans back? And that topic dropped off because of COVID, but I think at some point it's going to come back up again. Can you talk to us a little bit about some of the ideas that companies can use to help folks out that have student loans and some of the things that Highpoint is doing for employers and people with loans?
Yeah, absolutely. And it's coming more and more prevalent just because the millennials are entering the workforce, and most of those are not I've got a couple of sons in college. I understand, college isn't cheap anymore. It's very expensive. And so more and more of those folks entering the workforce have some type of student loan debt. And so employers, employee benefits are designed to attract and retain people, right? Good people and their employees. And now employers are looking at other avenues, other benefits to help those folks in the workforce, and help paying off student loans is one of those. Think about this. So if you're a employee that you have student loan that you're paying off every month, right? That person is probably not financially capable of participating in the company sponsored 401k retirement plan, which the employer matches. So if you contribute, there's safe harbor, they're matching dollar for dollar of the first, 3%, 50% of the next two. That employee, because of, going to college and getting an education, and that student loan is now being prohibited or can't financially participate in the 401k plan, which means they're not getting the employer match. They're not planning for retirement because they're paying off their student loan, right? And so, the CARES Act actually, with COVID, has enabled employers. If you're paying off a student loan, they're allowing you to get the employer match onto the 401k plan, even if you're not participating in it. So there's different things that are coming about to help employees pay for those student loans, which I think is really good. There's also, in addition to student loans, there's tuition reimbursement programs that are coming into play. All the things that help those employees become engaged with the company, but assist them in some of their personal debt or situations.
Great. One of the things that's going on right now is open enrollment, and people are starting that process. Can you talk to us a little bit about maybe the company right now who's not super excited about how their open enrollment is going, and a little bit about how they can start to plug into perhaps Highpoint and give a little bit of an update on what's happening with an open enrollment season right now?
Yep, absolutely. Most of our open enrollments going on right now are virtual, right? We have had an uptick lately of just more face-to-face, but we at Highpoint look at, enrollment as a way to get in front of your employees, to educate them on the great company benefits that the company is offering, right? The benefits that the company's offering. Because most times, you have an hour and you go through all those plans really fast and try to, high level hit those. And at the end of the day, those employees don't remember what you were talking about. They turn to the last page and look at how much it's going to cost me, right? And usually the one making the decision is the spouse at home that's not even in that meeting. And so we've done a lot of different things about, we've even had meetings for spouses that if you want to have, if your spouse has questions or making decisions, we'd love to talk with them about that. It's more about education than anything, education and communication. We have our own benefit admin system that links up to payroll providers, as well as it links up to the COBRA administrators and all the medical carriers and dental vision and so forth. So from a benefit HR standpoint, it makes your life so much easier. Employees go online, they can enroll in their benefits. It walks them through a step-by-step process procedure. In order to do that, they have to check mark, when they've read the Medicare Part D notice and all the different legal notices that they have to go through. But we want to make the HR's life easy. So that's one key thing. And our process is set up to do that. But secondly, we want to educate your employees. Consumerism, high deductible health plans, going from a urgent care versus an emergency room. There's different ways that we can, and maybe it comes different from us versus the employer, but there's different things that we can entail that will help them do that. But I think it's important for the employee to know how valuable the benefit package is, no matter what it is that the employer is offering, because there's some huge value in that. And I don't think a lot of employees understand the total cost that goes into that. I mentioned it before, healthcare benefits are probably a top 3 line item expense. You have payroll, and benefits are right there, right? And so I think having the employee understand the value that total compensation, they see their paycheck, they understand what they're getting, but they don't understand the total compensation through the different benefits that the company provides. So I think that's a key part of it as well.
Yeah, that's a really important point. Over the years, even when I first started to go out with my wife and showed her how much benefits was really costing her, between her portion that she paid and what the company was paying, many people over the years I've shown them, and it's just staggering to see how expensive it is, and how much you're really getting through your employer by the benefits that they're paying. And so that's always an important piece of the total comp package of, what your salary is, what your bonus is, and how much you're getting for healthcare.
Absolutely.
As we go into 2021, are there any healthcare trends that you can talk to us about or to think about for 2021?
Yeah, I think, working from home is a huge deal right now. Companies don't think about all of the rules and procedures and guidelines you need to set up in order to have a good work environment working virtually, right? And so there's different ways you can set that up. I think telehealth is really huge right now, and most insurance plans offer some type of telehealth package or benefit. We do as well. We have several telehealth vendors, but anytime someone's able to get on the phone and talk to a doctor, and without having to go into the doctor's office or leave work, from an employer, it's a productivity, right? Now that employee doesn't have to leave work to go take the kids to the doctor. They can pick up the phone, get a Z-Pack, what a cold flu, whatever the case may be. And then a prescription gets sent to the pharmacy, and it just, especially with COVID and not being able to go to the doctor and staying at home and all that stuff, telehealth has been a huge thing. I think you'll see some, different HSA, HRA health reimbursement. I think you'll see some different funding mechanisms and how that works set up. I think you'll see some specialty RX, different things as it relates to prescriptions. But I think telehealth is the biggest one. I think that's the biggest, virtual something to expect. And there's different programs built into that, different savings programs. So as you move to a high deductible plan to make it affordable, whatever the case may be, there's different savings plans. There's hearing aid savings, chiropractic, dental, vision. There's different savings packages and different things that you can put in there that don't cost. It's not like a benefit. It's a benefit, but it's not like health insurance. And so you can do that to help control the cost and offer your employees some quality benefits. It even has counseling, behavioral health. It has all different kinds of stuff. So I think that's one of the big keys moving forward.
Yeah, telehealth has been great. I know a lot of people that were really skeptical about it, and they've loved it going forward, and it's been, really essential to them through COVID-19.
I agree. Sorry to interrupt. I just, it's a way to keep your employees engaged, I guess, by, now staying, depending on the situation, not having to leave work, but it's been more and more companies, we have a provider that the employer will pay a premium per employee per month for it. It covers the whole family. And when the employee calls in, it doesn't cost them anything, so they're more apt to do that. Plus they're, there's apps on the phone. Everybody has an iPhone or Android or something like that. It's an app on the phone. It's very easy. It's, you have access to those providers, and a lot of those, most of those cost of those procedures or those, don't go toward the plan. That doctor's office visit or whatever doesn't go toward the plan. So if you're a performance-based solution and where you're paying for those procedures, then if you have some type of telehealth service, those claims are not going toward your plan, and so you're saving there. But telehealth is a big deal. It's just that work-life balance, right? Everybody's at home. A lot of daycares are still closed. And so you've got, people are, sitting on Zoom calls with kids in their lap and kids running around and dogs barking. I think it's just, different programs and different ways to have that work-life balance and have that, benefit everybody.
Absolutely. All right. Any final thoughts for us in the world of benefits as we close out this morning?
Keep an open mind. I think think outside the box. There are some great strategies out there. There's there's captives that a lot of people don't even, that used to be for your Fortune 500 companies. Captives are basically a group of employers that form their own insurance company to lower the cost of healthcare. We have those. We have a bunch of clients in captives that are controlling their healthcare spend. There's been a reference-based pricing plans have been around for a long time, but there hasn't been kind of one of the issues with the reference-based pricing is you can go to any doctor or any facility you want to go to, but in the past, that facility, if they weren't going to accept what the the payment, Medicare and 150% of Medicare or whatever the case may be based on the agreement, then that employee would get balance billed. And so there was a huge issue with balance billing and different things there. Most of the carriers now that offer reference-based pricing models that, one, the employee can go see any doctor, any hospital, do anything they want to, go anywhere they want to go to. But most of them have a concierge service that'll help them direct them to the most cost-efficient provider, being a hospital or an outpatient facility. And they work with those employees on reducing that cost. So we've seen reference-based pricing plans pick up, some steam, and they're typically, 20 to 30% below what the market is from a premium standpoint. But just have an open mind, be open to think outside the box, and risk tolerance. It's not a risk isn't a bad thing, right? And there's measures that we can put in place, stop loss protection, different things that we can control that risk for you. And so that's why we no longer say self-funded, because people it's too risky, but that's why we go performance-based solutions, just because we have measures put in place to control that risk. And if you do, it comes down to four things. If you do every 5 years, a performance-based solution, you're going to have one of those 5 years is going to be a good claims year. One of those, like this year, COVID, a great claims year, no claims. One of those claims years is going to be really bad, where you're going to pay, you're probably going to hit your max claim liability. But the other 3 years are going to be average, and it's how we structure the plan to make those 3 years or make that bad year not as bad, right? And so 1 out of every 5 years is going to be a bad claims year. And so we structure plans in order to help facilitate that. But four components: leadership, your leadership, your executive, your owners, they have to buy in, right? They have to help you promote whatever strategy or solution. They have to buy in. And once you talk the dollars and cents, and most owners understand that, but you have to have leadership bought in. The second thing would be culture. You have to create a culture where your employees enjoy coming to work. And if they enjoy coming to work, they're going to bust their butt for you and be more productive. A happy employee is a more productive employee. So culture is huge. Wellness is the other thing. We talked about wellness and making sure, you provide the different tools, because a person, a well person has less claims, right? It's there's a direct correlation between the two. And then safety. If you put a safety program together, we did a seminar not too long ago on, culture, wellness, and safety. And we had a gentleman from one of our insurance companies talk about safety. And the biggest thing today from safety is, if your company has a lot of drivers, is cell phones. Cell phones are a huge to our economy, our culture. Everybody has a cell phone. Every kid has a cell phone. they talk more on their cell phone versus, they're on their cell phone 24/7, right? I've got 3 boys. They're always on their phone. And so cell phones from a company standpoint can be very good from a communication standpoint and interaction and the way they deal with coworkers and customers and everything. But there's some risk involved in that. Most, if not 99% of all accidents out on the road are due to a cell phone. And so by putting in different procedures and rules and regulations to take care of that, you have to do that. And so those 4 things: safety, wellness, culture, and leadership. You take care of those 4 things, the performance-based solution is a win-win strategy. But you got to do those 4 things. You do those 4 things, you'll win 9 times out of 10.
It's interesting that you say culture, because our last guest, Steve Cadigan of Cadigan Talent Ventures, talked about the importance of the culture in companies to create a place where employees want to be. And then one of our future guests, Amy Campolani Wolf, who is the former head of HR for Symantec, she'll be talking about the importance of culture as well too. So definitely super important as we strive to retain and create a great place for our employees to work and make sure that we retain those employees. So from my standpoint, if you guys want to work with Trey or want to work with us and talk about how you can engage with Highpoint, feel free to email us at thrivehrconsulting.com. Trey, if folks want to get in touch with you at Highpoint, how do they do that?
So I would, from a culture standpoint, I would direct them to our website. We've got a bunch of culture, a bunch of different things on there. So it's www.hpigrp.com. Just go to Google Highpoint Insurance Group and you'll find us. My email address is tdavis@hpigrp.com. Yeah, we would love to talk with you if you have any questions or you want to see what other companies are doing, and we would be excited to help you.
Great, Trey. Thank you so much for your time today. We really appreciate it as always. Great information, and you're just so knowledgeable and so passionate about benefits. We truly appreciate working with you and having you as a resource. So thank you for all that you're doing.
No, I appreciate it. It's I've enjoyed working with you guys as well. So absolutely glad to do it.
Awesome. All right. Thank you. Have a great rest of your day.
Thanks,
everybody.
Thank you.
Bye.